Everyone, today I was not about to make a video about this specific day, but as per request of some colleagues, I'll try to make a summary of what's happened today because it was a tricky day, a day that started very small, but after a great huge opening gap. So before starting, I did ask you to click the like button and share this video with somebody that you think that might be useful for. Okay. So I made the title of how to trade Spike and Channel because that's what I think that is. From the beginning, you'll see why this is a Spike and Channel, and then how we can really anticipate what it could happen, right? So you'll see essentially my view of how we can manage this. I have my own trading style and I trade swings. So usually my exit is under L2s. You see how my trades and where were my premises to exit. So what you will see here, and try to explain the premises that we might set for each one of those trades that we might take, right? What are the bars, the key bars for the day? What are the bars that change the behavior of the market, and where how the markets behave when and get some targets that we had from the beginning of the day, even when we analyze early morning the scenarios that we have in the daily chart, right? So enjoy the video and please click the like button and let me know any comments, suggestions, or even questions that you might have. I'll be able to address if this is something that is under my knowledge. Okay, thank you very much. Hope you enjoyed the video. Well, let's go to take a look on the day. So if we see the graph like this, always is easy, right? To try to make the marks and recommend where the best trades and so on. But always my intention is to really try to identify the best trades based on the real time, how you can see this in the real time trades, right? So uh, what I'm gonna do is I'll try to show my trades, but also and when I exit, but also the entries that we can see here. So eventually, if we see the date like this, we say, well, this is a spike. This is a spike because we have a strong breakout over the of yesterday, right? Breakout, spike, breakout will follow through, right? Spike and channel, one, two, probably three here. One, two, three. Can say this. It's a wedge, right? Or this is a wedge, right? Both of them, those. So we can say that. So it's a spike and channel. Of course, for the proportion of this spike here, clearly this wedge is not it's not the start of the end of the channel. This wedge top, because it's so huge versus the three pushes up here. So probably the channel will not start there. It probably here in the 20 is the start of the channel. So it's part of what we always need to assess. For example, this will be one, two, three. Probably this three. Okay. So you have this movement. The only thing is that 35 were below 20. Could be expanding triangle too. So whatever. This is a channel line here. So we see this channel line here. We see this channel line here. Both dwelling here, right? In 43. So the key was the bar 55. But before getting there, and we're gonna get there, 55, right? We need to see that most of the people struggle because we have a spike and channel, but we were a huge opening gap here. When it happens, normally, the market stay sideways like this. You see, it's like this is basically open of the day here, so it's a trading range too. We can trade this like a trading range, right? And this is a good way to do it, and I want to explore more. But usually, if it stays sideways for a while in a bone mood until we have a breakup. But then that's why we need to analyze it that way. And then we have small bars, right? You see that the rest of the day we have a huge bars coming in the rest of the days. Then we start to have small bars, and this is really uncomfortable because with that huge opening gap and small bars, you can think in any moment it's gonna revert down and close the gap. So that's and we had some setups for that, and I'll show you that. Okay. So that's what we always will think about it. There were a point when I started to say to the people that we were safe, and it was about in the afternoon, and I'll tell you where, right? Tell you where. It's basically when I say we were safe because I was thinking that we will not go down this time and just up. I want to explain why I have that security about that movement. Okay, so let's take a look on the draws that I did. So huge opening gap. I'll try to go bar by bar, put it bigger here, right? Huge opening gap, and then the first element of pressure. Those are a gap bar up. This is a bar gap up and follow through, gap bar up and follow through. This is bullish pressure. When you have that, you can buy above one, but it's not recommendable, I'll say, as this doji, right? So I will buy above two, right? It's not the best bar to buy the close because it has a tail above. But above that bar or a close of three, I'll do it, and three also is a breakup of four of two. So and you see we left so we see the first element of pressure there, and then the bar three let this micro gap over one above one open, and remains open by 30 bars, right? So we have a strong bull pressure here. At the beginning, four consecutive bars. Even four was a breakup of three, so good bars. So the first tentative to go below was below five, six. It's a Fed L1 setup, so we can buy that one. So those are the buys that I'm recommending here. I did buy above six. I was long already, so I just add in here and get out here below 12. Why below 12? Because 9, we have a good 8, right? Good bar 8, but at that time was the biggest bar, and then reverted in 9. So L1 is the 10 because goes below 9, and then 12 is an L2 because was triggered by 13. So this L2 here, when 12 closed, I exited because I didn't like that 12 L2 here. And then at that time, we were thinking, oh, this is small bars. This could go below here and close the gap. So it's a good setup for a spike and channel, and then look at least for the low of the day. What happened is that 14 reverted and bought the L2. So it's a L2 failed here. It's a setup L2 failed. When L2 failed, we have another high, right? Another high, that's normal. And then again, one with a ledge here. You see here, this is a PTR already. And then an L2 in 17. So this L2 is a good entry short for swing, for looking for this gap here. So I was long here. This is my entry right after close the 13. That is an FEO of 12. It triggered, but it's an FEO. And we see here that we have buyers in this close. It's an edge here. Look at this. This is pretty much the same. Close, open, close, open, low, close, open. The same price. 13 and 14 and 16, the same price is in the edge here. It's a good TTR, right? So you can put a kind of a square here or rectangle, and you'll see that you can join. Look at this. You can join the lows perfectly and heights. See the closest. So machines were trading here, but 17 was an L2. So you can bet on a swing of this, stop above 15 and look for a swing down. If you get short here, right, you see this like a leg one and then this leg two. Right? I was long, so I took my first stop below 5, where by premise in theory will ends because we're in a spike and channel. Channel start on 5 at that time. So I prefer to get out here, despite that we were close of the moving average, and we can wait for the moving average and see what's happened there. So I will not take this stop if I wait a little bit more, right? Because probably I will exit and break even here, like this bar, for example. This bar's 20, but I took it. So it was very short for that time. We were with so small bars, like 2 or 3 points, no more than that. So I took that short, very short stop, and then prepare for my next. When I see these, I was tempted to sell the pullback here, but was having lunch. But below 21 during 23, I get short here, looking for that L3 and that leg, and I was kind of looking for 16, 20, at least this wedge here below, something like this, looking for. So starting this 22. When we have 24 failing in the moving average, right? I exited. Did I like it? I lost some points here. Exited and came 25, and I bought above 25, and I started to buy there. Why I started to buy? And that's important. So when you have L2 and L1, L2 here failing, so what's going on, guys? So here L2 fell, here A2 fell, should have failed so far. So I started to think that we are not gonna get down because we have one opportunity in 12, another opportunity in 17, and another in 23, and we didn't get down. So what the bulls are looking for, what the bears are looking for to get down. This is a good, spike, and probably L2, L3 entry, and they didn't go down. So that's why I did this. I decided to buy 25, about 25. Of course, we also have this entry here, limit order, if you are experienced trader, you can get this one and look for again, continue looking for this target below, right? It coming in a macro channel, but we are in trading range. This is a triangle already, so this is a good triangle here. So what I see here an entry below 32 because it's a breakup of this trading line, right? But what I did is, well, guys, you know what? When this is coming to test 20, I'm gonna try to get H2 wolf flag there because I think that it's gonna fail based on all the fails that we have, and also we're buying below low in the trading range. If we took this like a trading range, this is buying low of the trading low 50%. So that's basically why I put my limit order at. So that was my first limit, the closest in the low of 20 I bought. So I put 2 minutes here, but we have this great 36 that then is a no-brainer buy. A good bar closing above moving average, but also reverting 1, 2, 3, 4 closes, bear closes. So it's strong enough to get long in 36 and be happy. To be honest. Trading line here, and then IOI. I think that it's important to explain how our IOI works. I think that's IOI are mostly continuation patterns, right? So Albrook says always that in the books. So when you are in a trading range, it behaves like a reversal pattern. But when you are in trend, it behaves like a continuation pattern, right? So if you have if you are in a trading range and you expect that this will a reversal pattern, you expect sellers below 41, right? That's the behavior that we expect for if we are in a trading range price action. Hear me well. If we are in a trading range price action starting in this IOI, we expect reversal down in the trading range. If we are under hypothesis of continuation, trend continuation, then we're gonna have breakup up and continuation of the first leg, right? Like this. And here this 40 is important because we can get back to my analysis that I published today. So we see the analysis here. Look at this. There is an opening gap that was filled between the last two gap bar and Friday by closing, increasing chances of follow through bull today. We have a new high above previous swing and L2 fell setup. Now officially we have a wedge, but with room upside to test or measure move of bar 252. This 252 measure move up, right? Until 5188.75. Guys, looks where these 40 were. I'm gonna put here. Was the first. Look at the height of 40. 5188.75. So the 40 reached the target, the original target that we're looking from the beginning. Okay. And then if we continue reading, just to finish here, the thing is that any close above Friday bar will imply some tentative breakup of a bird trending line major from whole April. This bird trending line here, right? So we are in a decision point. What are the probabilities that I was Bulldog G follow through testing 5188.755200 and training range? So my hypothesis was okay, we'll test here and we'll test 5 2000s here. Look at this, right? And they will reverse down. That was my hypothesis. That was what I was expecting for. Okay. And then we have the two tests here. We have the two tests here in those areas. So price action, pure price action, and clear price action. Right. So it works very well. So coming back to the 41, so IOI was triggered above. I bought above 41 because I was thinking on above 38 in fact during 42 because I was in fact sorry I buy here and buy here, and then when this 41 came up I get out quickly. Why is that? Because it was a trading range, could be L2, so we could have sellers below, so I prefer to get out and then buy it again in case of it was triggered up as it was. So I bought again above 38, looking for that um, breakout breakout of the triangle here during 42. Then 42 is a beautiful bar. So far the best bar for the day, breaking out high of the day, breaking out, not breaking out high of the day, but breaking out the triangle and also closing above the high of the day up after this spike. So it's a continuation, right? A couple of legs up, and then this micro channel. But at that time I'll say that after D42 I was not more expecting going down, to be honest. I was expecting more to continue being in a channel like this because already the moving average already we see already fails during the movie in the moving average in 40 41, and then I was expecting the same 46. So I did buy here above 38 and keep it, right? 47, great bar. Again, reversing three closes, very closes, three very closes, reversing in this 47. So it's amazing bar. And then we start with a macro channel, tight channel, with some of the bars going down, another bars, right? Like this. So that was basically my entry was here, right? And just keep holding, right? Well, we have two legs up. It's normal in a channel, so we are in a channel, of course, right? Two legs up, and then we new high and taking profit, so we can expect that always. So it's normal to have two legs down too, two legs up, two legs down, and then resumption. That what's happening here and accelerate up, right? 51 was an H1 bull flag. It goes below 50 and started to get more bears trapped out, right? And you see 52, when 52 form it, I say no, that's gonna be bought. Same 54 is gonna be bought, and then 55 was one of the best bar of the day, and you can buy, but it was needed because it was in a channel line, was needed follow through. So 56 was the minimum follow through. You can buy above. I did it and complete my position here, and then 59 60 bars that give us the impression that we were in a climax in the third legs up in a wedge. So eventually you can exit on 60. It's a good exit, as some of the colleagues did, right? I didn't exit. So in that, but then I did exit on 68. That was my exit because it's an L2. I prefer to exit on the L2, even I were 67 trigger the L2, but I didn't exit because the tail still fail again after 20 bars, 20 GB support, so fell again here. So I wait a little bit more, 68, and then I did exit on the close of 68, right? But when I exit, because I was with full size here, when I exit, I was also knowing that we have a wedge here, so I put my stop, my entry. Basically, I did this one here and put my limit entry there, here, and was triggered, and then wait for the wedge shot. So basically was the trade that I did with limit order there. It's a way to entry to calculate how you can enter below 67 and will be okay with the stop, technical stop here or below 46, right? And then H2, this is a wedge bull flag, this is a signal bar, right? Entry. This is a limit order entry, FBO of the channel line. This is another way to enter, the way that I used. But sometimes it's better to use this. That is a better probability trade in 74. So and then breakout of the flag, which will flag breakout, and then just buy for any reason there. But again, I like to highlight some bars that makes a difference here. Again, the failures of L2. If we see the failure of L2, we need to get the conclusion that market is not going down in some moment, and I get that conclusion exactly in the 42. So an L2 here was not triggered. The 42, I already thought we are not gonna go down, and then I started to say to people, we're safe, we're safe. It's not are not huge bars, it's small bars, but we're safe, and it was safe. So from here, buy a bot here and was safe until I did exit here in this more complex flag, right? Basically, that was it. Another thing to finalize, just to finalize, is look at these guys. You were looking for a target, so measure, move. We have a strong breakout over high from yesterday at the beginning of the day. So you make the measure move of the day, where guess where it goes directly there. Price action is wonderful. Just you need to start it. All Albrook's teaches is this. You know, you need to use this as a measure measure move up, and you'll be you'll be you'll be fine. That's always that. So thank you very much. I think that we have a great green day. And most of our people get a great green day. I hope you do. Please let me know your comments if you have any doubt about that. Uh, another another thing that I forgot to tell you is this technical stops. The only one that I would say that was kind of tricky was this, right? Technical. But the big one, 35, 40, even 46, they all worked well. Even here, 51, 55. The only one that was not was that. Okay. Thank you very much for watching me. Don't forget to click the like button. Let me know if you have any comments or questions there. I'll be happy to answer you. Okay, thank you.